organized by PEPESA. We hope that you will learn, but also we are encouraging you to also participate. I am the MC for this session. Just before we start, I just want to clear some things as a disclaimer. I did say that my name is Samkelo, my surname is Blom, and I'm fully aware that all of you sitting here, you are very advanced. You're thinking, if his surname is Blom, that practically means that he also qualifies to go to the US, America as well, because his surname is an Afrikaans surname. Just for clarity, I've been trying, I've been everywhere. None of my friends who own farms or anything, they're saying to me, no, Samkelo, you might have an African surname, but you won't be able to go to Texas, Ohio, and Utah. So it's a BE session. We're going to be getting practical, but also learning, getting technical. I'm happy to be joined by my colleague, Lynn, from the PES. I'm going to give each of them an opportunity to introduce themselves before we just delve into it. So let me start with Lynn, and then I'll go over to Johnny, and then my best buddy, Richard, writing as well. Over to you, Lynn.
Good afternoon, everybody. I am so excited about the session today. I'm responsible for Gauteng and the Eastern Cape, but my favorite portfolio is the SMME portfolio. So I really hope that we're going to have a great session this afternoon, participating, asking questions, and as we unpack a very interesting topic that I think a lot of people will have questions about. So please prepare your questions towards the end. And then I'm going to hand over now to one of my other colleagues to quickly introduce themselves. Maybe Johnny.
Thank you very much. Good afternoon, colleagues. My name is Johnny Goldberg. I'm the chairman of Global Business Solutions. I hold many roles in South Africa, but I'm so excited to spend the next hour or so with you just discussing some opportunities under BE. As again, I think we've got to find creative solutions to get you the best score you can for the money you spend, and of course ensure that your businesses thrive under what you do under the BE heading. So that's what my job is to come in, to intervene, to give you some ideas, show you the clever stuff we've been doing out there to ensure that you have the maximum scorecard, you get the maximum benefit your business, and of course you get the right spend, the right traction for your spend. Over to Richard. Thank you.
Thank you, Johnny. Yeah, I'm the guy who does the technical stuff. I tell you about how to do BEE, and Johnny makes it look sexy and fun. So I'm the guy doing the technical side. Thanks very much. Back to you, Samkelo.
Excellent. Thank you very much. I see David has raised his hand. David, you raised your hand. I would like to give you a chance to go to a question. David Malkin. You can just unmute
yes,
and
sorry,
go.
it was an accident. Apologies.
David, I just want to let you know I'm the only facilitator globally who charges a fee if somebody has raised their hand. And you are only allowed to pay me through Zim dollars in my Capitec Bank, which is in Khayelitsha. I'm the only facilitator, but only in Zim dollars, and you can only use my Capitec branch in Khayelitsha. You are forgiven, at David. We're just gonna go in, but before we go in, if you don't mind, Richard and Johnny and Lynn, I thought in the chat box so that everyone can be included, can we please ask people what are they hoping to learn or to get out of this session? When we ask that question, Johnny, it's a smart way to get people to actually engage in the session, not be busy with solitaire or spreadsheets or email from their bosses. We've learned ways now to include delegates. So if you are in this session, just put in the chat box, what are you hoping to learn? And please don't use those normal global terms like I want to learn more, I want enlightenment. We all know about those ones. Can you please share to us, what are you hoping to learn in this session? You know, don't use words like I want to learn more, I'm keen to understand. With those are generic terms. It's like Valentine's where you say, I love you better. So in the chat box, please share with us, what are you hoping to learn out of the session? Giving you time just to type. Please share with us, what are you hoping, our networking opportunities, Rahul? You've come to the right place, Rahul. And ROI, okay? Other people, just share in the chat box. What are you hoping to learn? What are you hoping to get out of the session? Please ignore the email from your boss. Start by responding to this. Nita, you want to learn more about ED, not executive director. And my brother Claiborne, you want to learn about business model can assist. Oh, wow. Still, you want to learn from the questions. Other people, just put in the chat box. Where they soup that opportunities there, where are those opportunities? Whether it's going to America, but you want to know where are those opportunities. And then Annalene is always, you want to maximize on the scorecard. Annalene, I assume that we're talking about the B scorecard, not any other scorecard there. Just teasing Annalene. 2 more people. Oh, wow, Shauna, you also want to learn about B, best practices, Spiwe Blosse for clarity. Surname is Blosse, not Blom. Wants to learn about how to leverage Pepesa resources for B. Thank you very much, colleague, for indicating what you want to learn. Then my last question before I hand over is, right now, presently, what are your challenges with BEE? So you said what you want to learn right now. What are your challenges with BEE? 1 or 2 people, I won't elongate this one. Where you are now in your organization, what are your present challenges? And you can put something, even Rashni will allow you if you put something around ownership or something around skills development, just put that word if that's your challenge. And then of all the things we can help you, we can clarify if the Minister of Finance will tell us we're getting extra tax or not. This is a BE session. This is not about the budget speech that's coming up. We're not able to help you on that one. Oh, wow, somebody's asking here, how does CSI impact BE? Johnny, you are the clever one here. This is not CSI, the movie. Is it another CSI, this one?
No, this is the CSI. We understand this one. It's not Miami,
Okay.
CSI.
Oh, okay, sorry, man. I went to a township school in the Eastern Cape, so when I see CSI, I think it's a movie, okay? Ownership challenge. Oh, wow. And courses, ownership challenges. Okay. Thank you. Thank you very much. Oh, wow. I like alignment with industry standards as well. Very good comments coming out from the feedback. We are taking note. And then when we come to question and answers, I know Richard is very good at explaining. Also, Johnny and Lynn as well, who will share those things. We'll share those things as well. Can you move on to the next slide, please? Okay, so the reason why we already told you that we're here to discuss BEE, but how to integrate and make it more relevant for your business, but also to show you opportunities as well. On our side as Pepesa, we did a transformation survey. In that survey, many of you sitting here, your organizations did participate, and it also did show that we are doing some great work on BEE. Key areas to improve were around skills development, were around management control, but also around enterprise supplier development. So in this sector, we identified that we need to spend a lot of time on management control, helping our members, also around skills development. I'm glad that Richard and John will also do a deep dive on what things can we do under those ones as well. And then also the most important one was enterprise supplier development, which has got more points as well. And towards the end, we'll go deeper into some of those areas. Thank you very much. Next slide. Okay, we've already done the intro. I'm going to give over to Richard and Johnny. You can take over from here, then give over to Lynn. Over to you, Johnny and Richard. Thank you.
Thank you, Rich. Let's get on with the session.
Sorry for some. I'm not used to working in Zoom. I'm a Teams person, so I'm learning Zoom and relearning Zoom at the present. Okay, I think let's just start off with question. A lot of people ask me, why do we do BEE? Because even though it's a buzzword, it was very much a part of the election last year. Why do we do BEE? It's one of those things that actually is not legislated. There's nothing in the law which says you must do a BEE certificate. The DTIC and the government have been very strategic and very clever in actually integrating it into the business environment and in a totally different way. They've incorporated it by doing things such as you must be a certain level to get incentives. You must be at a certain level to get water rights, as 2 examples which come straight to mind. So that's why we do BEE. The other thing is for something that's not legal, there is a severe penalty for doing it wrong. And I'm talking about what I refer to as the new South African F word, and that is fronting. If we do it wrong and we get caught doing it wrong, and it's proven that we've done it wrong with intent, it's fraudulent, we can go to jail, and there are some very strong penalties around that. So why do we do BEE? It's the right thing to do. We've got to do stuff to actually try to bring more people into the economic environment, bring more people into the active economy, to make sure that it's no longer a township economy where there are billions of rands being made and traded on a daily basis, but which don't really affect the measured South African, the formal South African economy. So it's the right thing to do. It's also becoming a strategic imperative. If you're a level 6 and your competitor is a level 5, they can eat your breakfast. And so that's why we now need to start looking at it from a strategic imperative side, because we are losing business. We can also use BEE as a way to contribute to the growth and development, specifically of small, medium, and micro enterprises in South Africa. And that's via things like your enterprise development, supplier development, and some skills development opportunities as well. So there are contributions to the economy, which makes it life a lot easier for people. It provides opportunities for larger organizations to actually use their leverage to benefit small businesses too. So that is another way to do it. Contribute to skills development and employability of South Africans. I think we're going to talk quite a lot today about skills development in the BPO space. And that is the one thing which I think generally a lot of people say South African government or South African businesses are not good at doing, is spending money on training staff. I tell everybody, if your board wants to cut or wants to save funds, where is the first place and the second place that they cut funding? Often it's skills development, and then it's things like your corporate social or socio-economic development expenditure. So those are often where things are cut. It's a knee-jerk reaction, and often it can have a very negative impact on the BEE scorecard. So we need to watch out for that. Uplifting people with disabilities. There is significant space on the BEE scorecard where we talk about people with disabilities, and we need to work out ways to actually bring them back into the formal economy, to give them opportunities to focus more on their abilities rather than the areas where they are lacking. So that is a very important thing. And as an accountant, I'm very keen on a return on investment. Going back to the first bullet, it's the right thing to do. You tell me I've got to spend 10 million rand because it's the right thing to do. I will invite you not to participate in the comedy show because you're not funny, but it's a return on investment. We've got to make sure that how we spend the money, we get the best benefit from that. So based from that, the 10 basic tenets we're talking about at the present moment, we're talking about training for people with disabilities. BPO itself is the fastest growing sector, and Lynn Reshni, if anybody of you want to jump in at that, we can talk a bit about that. And then we also want to talk a bit about the YES program as part of the development specifically in this area. Lynn, anything you want to say quickly?
Yes, thank you for that, Richard. Yes, indeed, our sector is the fastest growing, creating youth jobs at scale. And yes, of course, all of the activities that we do in our sector lead us to our target of creating 500,000 youth jobs by 2030. And we keep reinforcing this because it's a very important point. And then, of course, about a year ago, we took a decision to devote particular focus to the development and growth of the SMME sector. And we are committed to skills development and sector training. And this plays a big part in the work that we do. And then finally, before we get into the depth and detail of our discussion today, we are, of course, at the forefront of promoting South Africa in the key source markets. Thank you, Richard.
Thanks. Okay, just to now kick off into the BEE side, I think most of us are aware. I'm going to talk on a very cursory basis on most of it, because I think a lot of people are very aware of the technical side of BEE, but just to talk about it so that we've got the context. There are three priority elements. A large entity, in other words, an entity with turnover of greater than 50 million rand, must comply with all three of these priority elements. A QAC must comply with two of the three, one of which must be ownership. So we're talking about ownership as a priority element, sub-minimum of 40% of the net value. Skills development is a sub-minimum of 40% of the total points available for skills development. And it's one of those, this is one of those areas where you've got to be very careful with how you read it. Because if we're now operating in the tourism sector, it is not just the total points, it's 40% of each individual line item on the skills development scorecard. So we need to be very careful about how we read it, because there's a little S in the place here in skills in the tourism sector, which totally changes everything here. Supplier and enterprise development is the other priority element, which gives us three opportunities to lose a level, because it's a sub-minimum of 40% on preferential procurement, enterprise development, and supplier development. We lose, so if we don't meet that sub-minimum on ownership, we lose a level. That means we could possibly go and not make the sub-minimums here on skills development and supplier development, but whereby we would lose points levels because of points as opposed to levels because of not meeting sub-minimum. Johnny, is that you?
Thanks. Just to contextualize these three elements, I mean, again, under 50 million, you have to do two, of which ownership is one. Above 50 million, many of you on this call, you might have a problem with ownership, because effectively you might be a multinational. Their policy would be not to do anything on the ownership level. So you lose the 25 points in ownership, plus you discounted a level at whatever level you get into. But not all is lost. We have many component manufacturing clients who don't do ownership, but have still got a level 5 or level 4 scorecard, because they've done very well in the other elements. And that's the issue, is how do you do well in the other elements? Of course, if you can do ownership, wonderful. But if you can't, there are alternatives. So we'll be discussing with you this afternoon as well. There are many other options to ownership, like preferential shares, like funds, BE funds, where you can get ownership in a number of ways, and the sale of asset. One thing we haven't highlighted, Richard, which you've had to look at extensively recently for a law firm, in terms of the sale of asset to a black-owned entity. So there are many creative ways one get to ownership without necessarily transferring the ownership. If you can't get a board to accept that internationally, you can still get to an acceptable level 4, level 5 in regard to doing well on the other elements. Thanks, Richard.
Thanks, Johnny. Okay, just the definitions of it's often best to talk definitions, but get that out the way first. EMEs, these are your very small entities, companies with total annual revenue on their most recent annual financial statements of 10 million rand or less, I beg your pardon. 100% or less than 51% black owned, automatic level 4. Greater than or equal to 51% black owned, automatic level 2, and 100% black owned by black people or by black women, automatic level 1. Easiest way to do it is to get an affidavit, though we are seeing more and more certificates issued by the CIPC, which give details as to ownership and sales. So that's an EME. The next one is a QSE, or qualifying small enterprise. This is the next band up. Turnover between 10 and 50 million rand on their most recent annual financial statements. If they're at least 51% black owned, they would get a level 2, 100% black owned, automatic level 1, once again on an affidavit. If a company is 50.99% white owned, or bigger than 50.99% black owned, they would need to do a certificate, and discounting would then also apply to those QSEs. So we need to be very careful about that. Once again, there are differing rules for differing sector codes, and the ones that come to mind are tourism, where the bands are up to 5 million for an EME, and then to 45 million for a QSE. And the legal sector code has totally changed everything. They are now sitting at 3 million rand for an EME and 25 million rand for a QSE. So we do need to be very careful about the sector within which we're working and the definitions of EMEs, QSEs. Status or procurement recognition. This is now the basis for BEE. Basically, government is the largest procurer of goods and services in South Africa, and they are required to look at their suppliers' BEE levels when making procurement decisions. So they will say to a direct supplier to government, you must be a level 4 or a level whatever, or whatever black ownership to actually qualify. That company will then look to their suppliers because procurement is the largest element on the scorecard. So we can then get more points based upon that, and so everything then flows down the trees as you go further down the level. Your customer will be saying, guys, we need your BEE certificate, and that then drives everything. And I'm not even talking there about Johnny. You better talk quickly. I've lost my train of thought.
Well, I mean, the point is, yeah, that's what drives the BE scorecard, your level. So we'll get into procurement, and we'll show you a remarkable thing when you deal with procurement early on, around 51% black ownership and 30% black female ownership. But the real question is, you trying to get a level because your customer wants it. I think what will happen in the sector now, you just got to be compliant level 8 in order to get the incentive. I think that will shift, like they did the motor sector. They shifted the compliance from a level 8 compliance certificate to level 4 over 3 years. I think it's going to happen in your sector, no question about it. So this level and the status becomes more and more important if you're going to give the government incentive. And of course, for suppliers, component suppliers, it's all about the government incentive. So again, just watch the space. But you've got to determine what level you need to be competitive. And we'll unpack the procurement scorecard, which I think most people have misinterpreted in order for you to get there, because that does affect what you do on ownership and some of the ideas we'll have for you under ownership. But the real point about the session is to give you some ideas and then to allow you to reach out through Lynn and her team or directly to us in respect to trying to assist you in getting the best BE scorecard you can get for your business. Back to Richard's first slide, return of investment for the money that you do spend at the level you do get. Back to you, Rich.
Thanks, Johnny. And the thing is that most businesses will sit there and say to their suppliers, guys, we want you to be at least a level 4, because that means that you can recognize 100% of procurement on your BE scorecard. There's no limitations there on that. So that's how that then works. Just to quickly go through the amended scorecard, ownership is 25 points, and you could lose a level, as we spoke earlier about, if you do not meet the sub-minimum there. Management control, 19 points. And I tell everybody this, to some extent, is a hidden priority element, because if you don't have the right people in the right places, how are you meant to train them? Which is the next point, 20 plus 5 bonus points. The priority element is based upon 40% of those 20 points. So if you don't have the right people in the right positions, it becomes quite difficult to actually train them. There are clever things that we can do to get you around that, but it can be problematic. The next one, enterprise and supplier development, 42 points plus 4 bonus points. So that is the largest element on your scorecard. That is your procurement, your enterprise development, your supplier development. And then socioeconomic development, or CSI, 5 points on your scorecard, totaling 111 points plus 9 bonus points. Those 9 bonus points can become very, very important. I think the other thing is just to actually talk about that. If we go back to the previous slide, you'll see that a level 1 is 100 points. There are 111 points available on the scorecard before bonus points. And as far as people at the DTI are concerned, they have made it very easy for a company to become a level 1, because there are 11 points more than you need to get on the scorecard to be a level 1. There are 111 points. So they're saying it must be very easy. And that is to some extent part of the idea that we're looking at there.
Somebody's asking to see the previous slide. Someone is putting the chat. He or she would like to see the previous.
There we go. That one, Samkela.
Yeah, I think so.
Is there a comment or question that's coming from that?
No, somebody called Yise Sidia. He's not from Ganja in KZN. He's not from KZN, but he asked, can we please see the previous slide? Sibia,
Okay.
Yise, are you happy?
He's got it.
Perfect.
He says he's got it.
Thank you.
We'll circulate the slides to everyone on the
Yeah.
call. Thank you.
Okay, just to go through quickly about ownership. There are three basic elements where we look at under ownership. We look at voting rights, we look at economic interest, we look at the realization. Voting rights, can the Black owner vote their shares at AGM? So we would look at exercisable voting rights of Black people and then exercisable voting rights of Black women. So a Black woman would be recognized twice, because the last time I looked, a Black woman is a Black person. So they get scored under by both lines there. 25% plus 1 vote to give you 4 points, 10% to give you 2 points. So, and if you have 10% Black ownership as an example, it would be 10 over 25 by 4. That's how the calculation works. So we need to make, and that's not just one, to clear up one other thing that I get asked quite regularly, that does not necessarily mean 35% Black ownership. Once again, dependent upon the sector code that you operate under. That is 25%, including that 10%. So if we talk about 15% Black male ownership, we don't need to look at the various demographics here. It is just Black people being African, Indian, and colored. Economic interest, we look once, this is the ability of the Black owner to receive dividends, either in the normal course of business or dividends when the company is wound up. 25% to give you 4 points, 10% to give you 2 points. There can be no restrictions on voting rights or economic interest. So that's one thing that the verification agencies are very strong at looking at, is is that free and clear, or are there any limitations? If there are limitations, they start looking at how do we actually start changing these percentages. Also, the problem comes as if it's seen as being a limitation, do we have some form of fronting impact? So we've got to be very careful when we look at that. Economic interest, let me just, economic interest of Black natural people in designated groups, employee share ownerships programs, broad-based ownership schemes, and co-ops. Designated groups would be things like disabled people, people living in rural and underdeveloped areas. Some sector codes include Black women in designated groups. It also includes things like Black military war veterans. 3% of your ownership would give you 3 points. And then involvement in Black new entrants, and that's a very unfortunate name, because everybody looks at that term and says, oh, if they're a new entrant, if it's the first time they've bought shares in this company. That's not the definition. A Black new entrant is somebody who has never been involved in a BEE deal where the value of their shares is 50 million rand or more, 50 million rand. So most people that we deal with, provided it's not your Tokyos, your Sakis, your Cyrils, those would not be a Black. Those are not. Everybody is a Black new entrant. It's only those named people that would be not be qualified there. Your realization points. This is where the priority element it comes in. You must get at least 40% of that 8 points, or 3.2. And this is based upon a 10-year graduation factor, basically 10% per year, and is a measure of the increase in value of the investment in the Black shareholders' hands. So we would take things like the value of the company, the value of the Black person's investment, with any debt that was raised on the purchase of the shares, the balance of any debt at the end of the financial year that we look at. It's quite a complicated calculation, but that is what that one is based on. And the target, as I said, is 3.2. If we get 3.19, I'm sorry that the verification agency doesn't have the discretion to round up, they would have to tell you no, that you are getting discounted. But we would be very, very, very careful about that. So 25 points on the ownership scorecard. If we don't have any South African Black ownership because we're a multinational, obviously that does put some significant points pressure on your scorecard because you're losing that 25 and you're in effect only being scored out of 86 points. So before we even talk about the level loss for discounting. So ownership is a critical part. Johnny.
Just 2 or 3 points to wrap up this section. One, if you don't have ownership and you can't get it, then we can still get you a decent scorecard. Again, on the basis that you need it for your particular business, could potentially lose business and gain additional business if you have a better scorecard. Two, the issue around there are other ways like preferential shares, and of course, the issue around investment in Black investment funds. Those options you need to consider with your boards and your executives because there are alternatives and sale of assets. So there are 3 issues that I'm raising here. Preferential shares, private equity, and the option of sale of assets are the issues listed under this particular shareholding scheme. I truly believe that there will be a move towards pushing you to get, especially those of you receiving incentives, pushing you to high levels beyond level 8. That's DCI, DTCI. I think they'll do the same as they did in the motor sector. But again, at the moment, you're going to do BE and get the scorecard you need to maintain your existing business or to grow into the particular additional business. Priority area, you discount it by a level of 1 if you're over 50 million and haven't done it. So again, reach out to us if you need to know more about preferential shares, sale of assets, or ownership or private equity investments. Very innovative ways to do it. You don't want to do a BE deal that's a front. Richard spoke to about, I truly believe rating agencies, if they discover a front, they've got an obligation at law to report it, and that's a criminal activity. We see the Dimension Data deal in the press and all the press it's done, and you simply ask the question. I always say, is it a front or not? I say, follow the money. If the business made 10 million rand net profit after tax, how much went to the Black owners? I've got no problem around people taking a legitimate fee for running the company. I had a debate before this session specifically on that. But the point is, beyond that, what's a reasonable fee for Richard and Johnny run the company? Well, that's 3 million rand a year, 1.5 million rand each. No problem. That's market related. But the money that's left over beyond that, after profit, net profit after tax, if it's distributed, it should be distributed equally to your 25, 33, or 51% Black shareholders. So that's really the litmus test to my mind. And any structure that anyone tells you beyond that, just be extremely careful. Back to you, Richard. I think that wraps up the ownership structure very well. Thank you.
Rashni, do you want to add anything under the BPO DTIC ownership management point that we discussed? Okay, Rashni, I'll leave you to come back later if you want to address that. Okay, management control. This now looks at how we actually manage the business. So there are a number of elements, and I've broken it with disabled staff in the middle of it. The first one is we look at our strategic decision-making people. So it's your board and your exco, manco, senior leadership team. I've heard various terms for that. So the board is, as it says, the name says, it's your board of directors, split once again between total board members and then executive board members. Once again, Black females can be very, very valuable on your board because they are scored twice. And a Black female executive board member is scored 4 times because they're scored as a board member, a Black female board member, a Black executive board member, and a Black female executive board member. Your executive management, this is your exco, your people who sit at that strategic decision-making level, but are not on your board of directors. So just talking about excos and just using it as an example, 60% of your board is or your exco, I beg your pardon, is Black people. You get 2 points. For board and exco, we don't need to look at the demographics. We also don't need to look at demographics for disabled employees. 2% of your employees need to be disabled, and the verification agencies will all want things like EA1 forms where the disabled person self-declares the disability. They will also want a letter from a medical professional confirming that that person is disabled in terms of the Employment Equity Act. They don't get that, the chances of you getting the points get less and less and less. There are certain other ways I've seen where some verification agencies will recognize the fact that we've got something known as medical confidentiality here. So they will recognize just letters from a medical practitioner within the organization confirming disability. Moving on to, so there we're just talking about Black people being the total of African, Indian, colored under those points there. The next one we start looking at is more of our operational type management, our senior, middle, and junior management. And here we do need to look at race and gender demographics. So there are some quite interesting calculations that we need to do to split the points and the targets between African, Indian, colored, male, and female. And we can get some quite almost counterintuitive results, but we just need to do that split. So your senior management would tend to be people who are direct reports into your board and exco. Middle management then direct reports like to senior managers. Also here you've got people who are professionally qualified, so accountants, lawyers, doctors, etc., would automatically be middle management, irrespective of how your system is graded. Junior management, these are like your foremen, team leaders, those type of people there. Once again, we need to look at African, Indian, colored. Johnny?
Yeah, so just to wrap up with this section again, so clearly you've got to, in senior management, middle management, or junior management, look at African, colored, Indian, male or female. So it's a complex calculation. But again, this is all about preparation. So in your current scorecard and the points you get under this particular section, management control, are you getting the most? Are your categories of senior, middle, and junior correct? Have we got any ideas to assist you in recategorizing what they actually are? So there's one opportunity, a restructure and recategorization of what fits into junior, middle, and senior management. Richard and his team and Cindy have done that 1,000 times, and the BE team, the one dealer, and their particular team. So there's the one opportunity, restructure. Two, the other opportunity is who advises you, that you get the right advice. And thirdly, the opportunity is to ensure you've got the right rating agency. Because again, rating agencies differ in opinions. What we do as advisors is we get the interpretations agreed on upfront before they appoint the verification agency. So we've not got any shocks. We know we're going to get the exact score under ownership, more or less, provided we can prove it. The fourth opportunity is disabled. Disabled is long-term reoccurring disability that hampers your access in a job within a job. So take an example, if I've got high blood pressure and can't handle stress well, I'm a middle manager, I can't be appointed to a senior manager because I don't want to be because I've got high blood pressure. That's a disability. You have many of those people in your particular business. It's how you uncover that in a confidential way and report on that provides you those particular points under disabled, those 2 points. You might not think 2 points is a lot, but you'll see in disabled skills, it comes to most probably a maximum of 5 points, the total scorecard around correctly categorization of disabled. Back to you, Richard.
Thanks, Johnny. Okay, this is now aligned with the economically active population target. So this is how we split the demographics. So we look at that on actually not only on an annual basis, but tend to be more on a quarterly basis. It's ownership and management control. We look at the most recent information. We don't look at financial year end. So we would need to look at the most recent head count. So if you've got a December year end, we would be using definitely your January headcount, and possibly even looking at using February 2025 headcount here. Obviously, we've got to start looking at linking BEE and employment equity planning, because the employment equity side is the very legal side. If you don't do that right, you get all sorts of negative financial implications. So we've got to start making sure that your BEE and your employment equity planning talk to each other. And that also then goes into something which I'm going to hand to Johnny, and that is the employment equity sectoral targets. From a BE's perspective, there's no impact at the present moment if you do not comply with your employment equity sectoral targets, because there's nothing in the BE codes which says no employment equity reporting, no BE score. Unlike skills development, where if you don't do your WSP, you automatically get 0. However, we do believe that that is likely to change. That's one area that we are foreseeing a change, but we need, in which case it makes that alignment between BEE and employment equity even more important. Johnny, anything you want to add there?
Yeah, thank you. So to wrap up of the second element that we've already done, the sectoral targets are big news at the moment. Department of Employment Labour rushing around trying to get sign-off from sectors, huge disagreement in sectors for the sectoral targets they're setting for 5 years. And I would imagine there'll be some litigation around that. But we can always have another session, Samkelo and team, about that for you as a BPO sector. I don't want to really influence the sector too much about it, but I've got no doubt about it that in the next year, your compliance certificate for BE will be your entry to the game for management control. It's not there yet, but it will get there. So a certificate of compliance on your employment equity would be the entry before you score any employment management control. My understanding, Richard, is now that you submitted your plan. That's the entry level, that you've submitted your employment equity plan and got a confirmation from the Department of Labour. Remember, if you have less than 50 people, not many of you that have less than 50 people, but then you won't have to comply with Employment Equity Chapter 3 at all. Thanks, Rich. Back.
Thanks, Tony. On to skills development. Skills, this is one area where I spend quite a bit of time with clients, trying to actually make sure that this is as complete as possible, because a lot of people just tend to look at skills development as being, is there a formal training course and is there an invoice? And they ignore a lot of the other training that actually happens within a company. So this is one area where I speak quite extensively with management at all levels throughout the business to actually ensure that we are recording absolutely everything that we can and making sure that it is as complete as possible. Because as we mentioned, it's a priority element. 40% of the 20 points, in other words, 40% of the points excluding bonus points, and if you don't meet that target, you would be disabled. You'd be discounted. I beg your pardon. You'd be disabled. You'd be discounted, if you haven't been discounted under ownership. So let's just talk quickly about it. And skills development as a percent, normal skills development as a percentage of your leviable amount, 3.5% to give you 6 points. Bursaries at higher education, so that would be at universities or TVETs, that is 2.5% of your leviable amount for 4 points. 3.3% of your leviable amount for skills development expenditure on Black employees with disabilities. That we cannot double count in that skills development and bursaries. That must be totally separate expenditure. That 0.3% for skills development on Black employees with disabilities is included in that skills development expenditure as a whole. So there is a double count allowed there. This is based upon information to your financial year end, and leviable amount is defined as the total of your skills development levy payments multiplied by 100, because your SDL is basically 1% of your payroll. So that is the basis for that. So that is now a rand spend. The next line is your apprentices, your category B, C, and D learners, 5% of your headcount to give you 6 points. So this is a headcount related factor. This is the spend that ties to a lot of these learnerships. So we use learnerships quite extensively as a planning tool, because I know I'm going to change the sector slightly. You're in the construction sector. You can't really have too many disabled people working on your construction sites. But if we can get disabled learners, we can then start scoring there, and there. So it can start affecting your scorecard quite efficiently as well as the 2 points that Johnny flagged under the management control scorecard. We flagged bursaries for higher education, and I'm going to ask Lynn to start coming in there because she wants to talk a bit about bursaries.
It's actually Reshni, Richard.
Is it Reshni? I beg your
He's
pardon.
passionate about the bursaries, yes. Thank you.
Good
I'm also happy
afternoon,
to speak about it.
everyone. Sorry. Is it okay, Johnny? Do I go ahead? Brilliant. Good afternoon, everyone. Thank you so much for joining us this afternoon. I'm sure you're finding this discussion quite valuable. So as you all know, for the GBS sector, we've done extensive work in trying to establish where we would really make some kind of meaningful impact on transformation. And one of those key areas is obviously skills development, because the sector does do a lot in terms of skills development. However, one of the areas that we've really been challenged around has been management. And we obviously wanted to look at, how do we invest meaningfully in growing our middle management and senior management in the GBS sector. And the area of bursaries has been quite compelling for all of us to say, listen, if we invest some of our spend on bursaries and to be able to develop people into middle and senior managers, and then eventually transition them even in terms of management control within the organization, that would benefit us in terms of our BBBE scorecard and the number of points we would get. So as you can see there, you get 4 points for bursaries with any higher education facility. And BPESA, as you know, does a lot in terms of identifying who those institutions are that we're partnering with to be able to provide the right level of skill, and that would be able to assist us with, bridging that management gap that we see in the industry at the moment. So we'd really like for the industry to start taking this a little bit more seriously. 4 points may not seem like a lot, but it is actually significant enough to sometimes make a difference between levels. And yeah, so we just want to make an appeal to say, please do look at bursaries and look at how, and like I said, we also, once you've agreed that that's a channel that you would want to invest in, please do speak to us about the programs that we've identified in this higher education space that would be able to align to both the industry needs as well as your individual needs from an organizational perspective. So that's, I think, the only sort of addition from my side around bursaries. I don't know if you want to add to that, Johnny, but I'll hand back to you all.
You're actually 100%
Thank you,
politically
Rashni.
correct. And again, if you think about how you can do that and score at multiple levels. Remember, it could be a disabled person that you're training, and you could then create your own learnership, apprenticeship, internship as an industry. So exactly right, Reshni is saying, reach out to the industry, you can create something for you. What we've done is we have certain courses accredited, which then count as higher education institutions. So you can claim that there, you claim it under spend, but then of course, you then adapt the course and add to the course modules that are relevant to your particular industry. So there are many ways you can actually design and develop courses that are there and retrofit them to get the best result for your industry. And of course, the more you spend on training and development, the more you support your next level up, that if people do leave, you have an alternative to that. If you are growing, you have people internally to take those positions. I was privileged to spend 3 days with Richard Branson 10 days ago. and we spent 3 days on a number of issues, including business. And his philosophy is two things within his company. One, train people, so you give them ability within your organization and make the organization such that it's attractive that the people don't leave. But he specifically says their success in majority of their businesses is promotion within. And the only way you can promote within, if you give relevant skills to people that they are trained and developed with relevant skills to take up those positions. So huge opportunity here, huge opportunity with Able, linking back to management control and these 4 points, and huge opportunity, as Richie saying, engage the sector. We are helping the sector as well. Let's find creative solutions to give the training and development that delivers for your particular business needs now and for the next 10 years. Thank you. Richard,
Sorry, trying to find my unmute button. Okay. So just to quickly go through a couple of other more technical issues around that. It's a priority element, as I've discussed. It's anything to enable your staff to do their jobs more efficiently and effectively. Your bursaries, your skills development, and your learnerships are demographics based, so we need to balance out your African, Indian, and colored. When we look at absorption and at disabilities, there's no need to look at demographics. Absorption is an area where we need to be very careful, because there are 5 bonus points for absorption, and it's based upon a long-term contract of employment on completion of the learnership, and long-term means until that person's mandatory retirement age. So we need to be very careful about that, because to manage it, because a lot of companies are under very tight headcount constraints. Also, you need to make sure that you're putting the right people into the right positions, as opposed to just giving somebody a job. It's something that is very, very careful. That's very critical to business. We've spoken a bit about the training to enter a pathway. Lynn, anything you want to add on this on the slide about opportunities? Because I think this is where we've got a lot we can talk about.
Richard, Johnny's hand is actually up, so let's allow.
I can't see it.
Thanks, Richard. Thank you, Lynn. I mean, again, sector coordination and cooperation, and coming to the head, going to some Keller, Lynn, Reshni, about these ideas. If we are training the right people on internships and learnerships, we should be able to absorb 100% of them, which would help your scorecard. You might be going through a difficult batch, you can't absorb them. But if you're training the right people with the right training that produces the right result, we'll get 100% absorption with the industry. It's a sector coordination that we need around this. And the part of this session was to say, let's coordinate our efforts collectively together to get you the best results as clients, as members of the PESA. Thank you, Richard. Thank you.
Lynn, anything you want to add there? Sorry.
Thank you, Richard. I think that Reshni very ably covered that in the previous verbiage around the bursaries and some of the opportunities. And I think the buzzword there is that, the sector needs to reach out to us so that we can support them in terms of coming up with some of these ideas and how to effectively allow these opportunities to come to life. So that's the only thing that I think I wanted to add there. Thank you so much, Richard.
And I think the thing is as Johnny has said, is the second bullet is to me is possibly one of the most critical ones. Is we've got to have that pipeline of skilled staff, because it's if we don't have that pipeline, we tend to start choking ourselves at middle and junior management. So we've got to start getting the people coming in. Moving on to enterprise.
Apologies, Richard. I've got one.
Sure. Sorry, Samkela.
Sorry, Richard. I've just got one. So I just got one question, and it's somebody who is anonymous. Will ask Home Affairs to investigate who that is. But the question is, they focus on training and employment of disabled individuals, or the political correct term is differently abled individuals, and also disadvantaged individuals to their business model. They would like to know in this session, how can they partner with us so that their ESD partner improve other organization DE score. So they like to know how can they partner so that other organizations can improve their ESD partner and organizational score. Johnny or Richard, do you want to try that?
Happy to go. Thanks, Kello. Again, it's like central coordination. So if you are organizations providing this particular benefit, one of the questions was bursaries is very high cost point, then let's find a way to lower that. Let's find a way to lower that in respect to what the bursary training incorporates and the costing of that. Let's see whether there are great providers, as the one person has put in the chat box, of disabled people for this opportunity. Let you guys investigate that, like you've done, like Richie said, about the training and development organizations and things we have there. Let's look at that, because when we deal with enterprise supply development, there are huge opportunities, like loaning that money business for expansion, like donating some money to that business for expansion, and then getting the supply of those particular disabled learners into the business to score the 5 points we've talked about above. It's all about seeing the wood before the trees here. And that's effectively what I would suggest. Thank you.
Excellent. No, thank you very much. Sorry, Richard, just got one more question. We will have questions towards the end of this session. But sorry, Richard, I have to allow this one question. The GBS sector, where do we fall under? Because some people say we fall under ICT. Other people say we are generic. Can you please help us on this Monday after Valentine's Day and advise us where do we fall as the GBS sector?
That is a very good question. It's because I can see reasons for you to fall under either ICT or under the generic codes. I think the thing is my general thing is that I would say we would fall under the generic codes, the general codes. But we need to, because it's not as if you are selling computer type businesses, you're selling services which may be on that. But I think where the confusion might come is where we're talking about the C under the term, because that's communications. And like that's one thing that most of the PO guys do. So we need to look at that very carefully and determine that. But my initial knee-jerk reaction, which may be right, may be wrong, is that you're under the general codes, but I would be happy to investigate that. In fact, I'm making a note. BPO, ICT.
I've got
the answer.
I've got Reshni's hand up. I've got Reshni's hand up. So I'm going to give over to Reshni. Reshni, I've got your back. Over to you.
Thanks, Kello. So Richard, if you're gonna go and look for the answer, you're not gonna find it, because obviously our sector is quite complex in the sense that you have a lot of them with their core businesses being finance and accounting, for example, or being it could be anything, because GBS cuts across every single sector, right? So that is why there isn't one sort of size fit all answer, which is why we were trying to do a sector code or a sector charter for the BPO industry, but realized that due to the complexity, we're not going to be able to pull it off. So the majority of our sector currently sits under generic codes, because they won't align with the minimum kind of requirements around like a typical ICT sector, because like you rightfully said, it's services. But then like I said, you've got some of them that also sit under the financial services sector. So it is quite complex. But when we are asked what should they do, we just say to them, go with the generic codes, because it's the easiest for them at this stage. But we did do some extensive work around creating the charter, but like I said, because of the complexity around, once you get feedback, it also differs, because if you're an international company, your requirements are very different compared to a domestic company. So and if you're an international one, it also depends which sector you fall under. So we couldn't get that through, but there's been extensive work done in that space. So I hope it just helps give some form of clarity. Thanks, Johnny. Maybe you got a better answer.
Yeah, I've got a hand up, yeah.
Thank you very much, Reshni. I agree with you 100%. I investigated this before the session, and effectively, I think you fall under the codes of good practice, the generic codes, as you've said, and that's effectively what a lot of your members have done. And I think that's correct. And I think it's correct not to have progress to the sector scorecard, because I think you're doing worse off in the generic codes. You just look at the tourism sector that Richard's mentioned, the legal sector, etc. So I think we've got to go with what we know, and what we know, and the interpretation, I think, is correct. We're generic. Thank you.
Excellent. Thank you very much, Richard. I'm going to give over to you so that you continue. You did mention, Richard, earlier on that you were struggling to unmute. Because of this program, we'd like to know who was the service provider that gave you the training and if they are BE aligned. Okay, over to you, Richard.
No, Samkelo, it's actually known as age as opposed to anything else. It's not a lack of training, it's age and lack of technical skills, but that's fine. Okay, enterprise and supply development. There are three sub elements to this one. The first one is preferential procurement, and this is who do you actually buy from? And there are a number of different lines, different levels within which we look at here. And this is one where we do see some opportunities to actually be clever with how we spend our money. The first one is our spend with everybody who is a compliant and an empowering supplier. 80% of headcount to give us 80% of procurement, I beg your pardon, to give us 5 points. So that's all our suppliers, irrespective of the level, irrespective of black ownership, and irrespective of ownership. So that then is 80%. So often we'll find companies will say, guys, you must be a level 4. And you talk to a generic, say be a level 4, that's fine. They can still only score on that line for you. We need to start looking at and this is now the intention of the DTI. We need to now start looking at your QSEs, what on earth? Sorry, I'll push some. Your EMEs, your QSEs, and I've gone back, and your black ownership to actually make sure that you're getting a spread of people on your BE scorecard. As an example, I worked with a client, and they had got a letter from the largest, significantly their largest customer, who said, guys, we want you to be a level 4. And the guy said that, but why? And the guy gave a very honest answer. I have been told to do that by my boss, who was told to do it by his boss. And so there was no real discussion, no real understanding of why they wanted to be a level 4. And this person sat there and said, that's fine. I'm a level 4, I'm a level 6, but I do have 51% black ownership. So I'm not only scoring you on that line, but I'm also scoring you on that line. He says our 51% black ownership also happens to be 51% black women ownership. So we're scoring you on those two lines as opposed to that line. The person sat there and said, I'm sorry, but that's not good enough. You must be a level 4. So there is, to some extent, a large amount of a lack of knowledge, a lack of people actually looking at the scorecard and saying, how can we actually do better on the scorecard with our suppliers? The issue does then also come is, if you're in a highly technical industry, there may only be a certain number of people who can supply what you're buying, what you need. So that then may limit you on this, because and may then limit you on a scorecard because all of those points there, everything up until the bonus points, actually goes towards your priority element. You don't make 40% of those points, of those 23 points there, you could end up being discounted. So you need to be very careful with this, and it is an area where we do spend a lot of time. The issue is just quickly on a purely mechanics basis. There are two parts to procurement. The first part is your supplier spend. So you would take the R1 million you spend with Global as an example, and you would measure. So that would be the supplier side. That is then measured against Global's BEE level. So we're a QSC that's a level 2. So you would need to spend that. You've got two parts that you need to make sure that your supplier spend is as high as possible, and we need to make sure that this TMPS is as low as possible. So that's where we spend a fair amount of time specifically looking at TMPS and making sure that all your exclusions are as complete as possible. It's one of the areas where a double count, normally very frowned on in terms of the codes, is actually encouraged. Because if you're buying from a company that is 51% black owned, 30% black woman owned, a QSE, it would score on that line, it would score on that line, it would score on that line, and it would score on that line. So if you are now very strategic about how you and where you buy from, you can score on up to 4 lines on the scorecard before we even look at the 51% black designated group owned suppliers, where their 2% gives you 2 points on your BE scorecard. Comments, questions, Johnny, anything you want to say on this?
There's a huge opportunity with the scorecard, and I indicated to you up front, is you've got to ask why you want what level that you want. Now, clearly, if the DTI says to get the incentives, you need to be at level X, then of course you need to be at level X to get the incentives. But if your client's demanding a certain level, you've got to decide why. And what clients don't understand, that if you've got no black ownership at all, you can only give them 5 points out of 29. The 29 points here, I think, Richard, in a quick calculation, and you can only give them 5 points of that 29 points. So again, back to ownership, consult with the team, consult with us around structures around ownership, because ownership 51% black owned, 30% black female owned gives you another 15 points potentially you can get out of the 29 points. Obviously, as businesses get bigger, QSE is difficult to achieve because people get over 50 million in terms of turnover quite quickly, and EME is under 10 million, difficult to achieve. But I'm really after in the scorecard those 5 points. I'm after the other 15 points if I can get them as well. To get 20 points is where I want to be at least. And of course, a sampling of points based on under 10 million and people that are under 10 million, companies that are under 10 million supplying us, and under 15 to balance it up to get a 23, 24 points. If you can do ownership. If you can't do ownership, you at least need to have a debate as to what's out there in terms of structuring. But huge opportunity here, but most people don't understand. Majority of the scorecard here is to 51% black owned and 30% black female owned, and you could triple or quadruple count. So if I'm 10 million, turnover of 9.5 million, I could count everywhere except the bonus points of 2 points, which you've got to explain still, Richard, the BDGO. Thank you.
Your BDGO is your black designated group ownership, and that would be people who are your qualifying black war veterans, people living in the rural and or underdeveloped areas, people with disabilities. So that's people that's businesses who are owned by those type of owners would fall under that. 2% for of your procurement for 2 points can be quite an important 2 points to get. Next one, supplier development, enterprise development. Supplier development, 2% of net profit after tax for 10 points. Enterprise development, 1% of net profit after tax for 5 points. The target for supplier development and enterprise development are very similar. They are your small companies, QSEs, up to 50 million turnover, who are 51% or more black owned. A supplier development beneficiary, as the name indicates, must be a supplier to you. An enterprise development beneficiary is a company that you are grooming to be a supplier, or is a customer, or is a qualifying black-owned business. So it's anything that you do to assist those companies to become profitable or sustainable into the future. So it could be anything from giving them loans, from helping them, from giving them infrastructure in the BPO market, to helping them develop their own little BPOs. It could be anything like that. 2% of net profit after tax, as I say, for supplier development, 1% of net profit after tax for enterprise development. If you are making, we need to, on an annual basis, check your net profit after tax against certain industry norms, to make sure that you're not artificially lowering your net profit after tax, but that is basically what we're looking at. There are bonus points if you have an enterprise development beneficiary who then writes an invoice to you during the year that we made, that the year of measurement, you would get 1 bonus point. If as a result of those enterprise or supplier development activities, 1 job is created, you get 1 bonus point. So the total is 42 points, and there are 4 bonus points. So there are 46 points available for enterprise and supplier development on your bonus, on your scorecard. Once again, I skipped the priority element. If you don't get 40% or 4 points for supplier development and 2 points for enterprise development, if you haven't been discounted elsewhere, you could be discounted here. So that is enterprise and supplier development. A couple of other concerns quickly. This is where the employment equity element could start coming in, because at the present moment, every company is automatically an empowering supplier until further notice. And you need to be an empowering supplier to be recognized on the procurement scorecard. And one of the things that they look at in terms of empowering supplier was compliance with the Employment Equity Act. In 2016, they realized that the tests that they had in the codes to be an empowering supplier were very difficult. In fact, if you were in certain industries, it was almost impossible to be an empowering supplier. So they said everybody, the DTI gazetted that everybody was an empowering supplier until further notice. That until further notice is a bit concerning, because that could be gazetted that you now need to do those tests. That could be gazetted on Friday, in which case 90% of my clients would have a problem. So that's where the employment equity question could start coming in. There are a number of multipliers. If you're buying from a supplier development beneficiary in terms of a 3-year contract, your spend can be multiplied by an additional 1.2. Procurement from a Black-owned EME or QSE that is not a supplier development beneficiary can also be multiplied by 1.2. And procurement from companies that are at least 51% Black-owned or 51% Black-owned, women-owned, using the flow-through principle, can be multiplied by 1.2. So if you're now clever about who you're buying from a supplier development beneficiary, you can multiply the spend by 1.2. You can't then also go and buy it from somebody who's not a supplier, so that one falls past. But if they are 51% Black-owned, use it on the flow-through principle, and you can see that directly off of the affidavit or off of the BE scorecard, then you can multiply it by another 1.2. So you'd have the multiplier based upon the level. So say they're a level 1, that's 135%. You multiply the spend by 135%. You multiply it by another 1.2, and you could multiply it by another 1.2. So there are opportunities to increase your score quite substantially there. On supplier development,
Johnny's raising his hand. Yeah, sorry, Richard. Over to you.
For some reason, I can't see it anymore.
Yeah. So just to stop the technical hand raise, I just put up my hand. Go back one slide, Richie. Actually,
Sure.
2 slides. Go to preferential procurement. Let me put a scenario to you just to help everyone. So effectively, we see there's a huge amount of points here. And then over the next page, also a huge amount of points. So take an example. We adopt a small starting up call center. We adopt it. It's 100% Black-owned or 51% Black-owned, either or. They start off being under 10 million. They're a startup. Of course, for the full year, we can claim up startup. We can claim under preferential procurement, the full procurement, the 50% procurement QSE, the EME procurement, the 30% Black female owned, and the 51% Black owned. We can claim all that with someone that we fund to start. They supply us a service, and we can also get enterprise development, supplier development, whether they supply development, in this case they would be, we get the supply development particular points there. So again, you could have 2 or 3 people supplying you, doing some subcontracting for you that are 51% or 100% Black owned. And we've had debates with the team from the PESA, and they believe this is a huge opportunity. It's a huge opportunity to get Black ownership within the sector. It's a huge opportunity you get procurement from Black-owned companies, and for you to support them on enterprise or supplier development. So just a creative thinking that I think produce solutions for you, where they'd subcontract and do some of the work for you, obviously at the standards that you so desire or your client so desires. I've never seen such a big waste of money of what companies do on supply and enterprise development. It's unbelievable. So you need to rethink this. You need to rethink your procurement strategy, whether that is a debate around whether we set up a proper procurement hub that's 100% or 51% black owned. We need to have those debates because there are huge points here in regard to that. Deaf call center, we'll talk about, Lynn will come to that. Adopt a SMME that might grow, but you'll still get the benefit. A 3-year contract gives you a multiplier, providing support, all the technical support, and the cost of that technical support goes into it. What we find, ladies and gentlemen, Richard and myself and our team, is people don't account for the stuff. So the help they give these particular businesses, the help they give, the time and effort that's spent is not counted and properly and documented. And of course, that all counts in regard to your enterprise supply development. And of course, it feeds back into your procurement channel. That's fantastic. So just my few points on this huge opportunity element under the scorecard. Back to you, Richard. I know Lynn might want to say something here too. Thank you.
I just want to pick up on something you said, and then I'll let Lynn take over. And that is, we sat there and said people just are not properly recording it. It's one thing why I'm an accountant, as I mentioned earlier. It's why I like having accountants working on BEE with me at the client, because we talk the same language. We can also sit there and ask silly questions like where do you actually put these transactions? And I give them lots of examples. Because I had a thing with a client where I was talking about donations under CSI, which we'll get to next, and the guy looked at me and sat there and said, "But Richard, that's not a donation; that's marketing expenses." So it's a case of we need to go and we need to do the data mining. We need to actually go in and look at where things are coded on your balance sheet and income statement so we can find out what we do. So I find that a lot of companies are doing things. And just aren't aware of where we can claim that. And I tell everybody, it's just a case of slightly changing the narrative. Like using my example on the marketing costs and donations. We just sit there and we just say it's a donation. It's used to, in that case, it was used to develop a school. It's just a case of changing. We're not doing anything wrong. We're not doing anything that's illegal. We're just changing the story. Lynn, if I can hand over to you, because I know you're very passionate about the first couple of points here.
Yes, thank you so much, Richard. Thank you, Johnny. So one of the key drivers within the GBS sector is the commitment to PWD. So for those of you who attended the AGM, we made a very exciting yet quite significant announcement about the official opening of the Deaf Touch call center. Incidentally, the first of its kind on the continent. In fact, the very first call was made during November 2024, really exhilarating stuff, especially since this has been in the making for the last 4 years. So, the ongoing initiatives around making sure that we immerse people with disabilities into the sector is something that's really, really close to our hearts. And then one of my personal favorites, and Johnny alluded to it earlier, is this idea and notion of adopting an SMME. So we've been waiting to launch this for quite some time now, and it's been based on the vast enterprise and supplier development opportunities that are available in the sector, and some of those were demonstrated during the course of this call. And in part, it's why we are hosting the session today, to help our members to unlock the benefits of triple BEE through supporting an SMME within the sector. So as a measured entity, you would have an opportunity to make direct impact within the spheres of support, access to market opportunities, and then, of course, making sure that you provide assistance, specifically those bigger BPOs. You get a contract that comes across your desk. it's too small, you can't really be bothered with it. Those are some of the things that we are really trying to get focused on, because that contract can be shared with an enterprise development partner, and in this case, with a smaller BE-owned company. And of course, some of these contracts are maybe not economically viable for your large business, but really, really crucial in the development and the growth of SMMEs within the sector. Johnny, I'll pause there because I can go on for a lot longer, but I think our guests get the idea around how significant this opportunity really is in terms of the case study that I've just mentioned.
Again, Lynn, that's fantastic. I mean, we're just trying to elevate ideas for people to consider, to really think about what they're doing, what they've currently done for so long, and to see whether we can improve their scorecard without necessarily spending more money, but more cleverly, and get the best spend for their particular buck. And there are great opportunities, and there's still money to be made and margin to be made even in those scenarios. Back to you, Rich.
Johnny, I'm actually going to hand straight back to you, because we're going to talk. The next one is your slide.
So I've talked about this a lot. Thank you, Richard. Thank you, team. I'm passionate about creating opportunities. So enterprise supply development could be a doctor call center. Again, skills development, definitely supervisors, managers, bursaries, and how we create that, and how the industry body helps you adopt the course. They already have accredited courses that can be adopted and adapted to your specific needs for now and for future-proofing you for the next 5 or 6 years. So small B companies, skills development, PTY Ltd, in respect of what type of training you do for your benefit. And remember, you're training Johnny, but you're retaining him too, because in most training, you've got a work back arrangement. If you don't know that, email us and we'll send Lynn and some Keller a form of a work back arrangement. Everyone who goes on training should be having some type of work back arrangement to the particular company to tie them in, so at least you get some return to the investment. Of course, Richard Branson doesn't say that. He says you should make the environment conducive so that you stay. That's a lot easier said than done. In some instances, specifically, we're under pressure, and generally we as this industry work for a client, and there's pressures are from the client, but there's lots we can do in that regard. So again, how we spend that skills development money properly, how we spend that enterprise development money properly. Do we set up a procurement company, and how we do it that it's not a front, that it makes a particular margin, and can we get that back? How do we put pressure on our suppliers, and how do we mix up our suppliers? I saw a 200 million rand contract go from one supplier to another supplier based on their BE score about 10 years ago, Richard. It was a client of ours who remain nameless, and based on the fact that they were similar on price, similar on quality, the one had a better BE scorecard than the other. The client immediately switched suppliers, 200 million rands of the business per year. So there are lots of opportunities for existing members of PESA in the scorecard, and we are open to assisting you in that regard, and you'll see that when we talk about a call to action. So just putting it together, so many opportunities, so much money that's misspent, that I think with a careful thought consideration you could do. Some of you might be limited on ownership, but there are solutions to ownership. Even if they're not, then effectively, how do we maximize the other elements of the scorecard within your budget? And how do we, just the clever thing, who advises you and who verifies you? And are you getting the best interpretation for the interpretations out there? Richard and his team deal with 10 verification agencies. They know where the interpretations lie. Reach out to him, find out where they are, and where you can get your best interpretation, because there are some gray areas, and some agencies need to make some calls on the gray areas. We want those gray areas to be in your particular favor. Again, until those areas are clarified in law, and the law takes a long time to change. So multiple opportunities across this scorecard. We haven't even talked about CSI, which we'll talk about it now, corporate social spend, but it's 1% for 5 points. Again, I want to see CSI tie back into your business. So how are you getting the benefit from your business? Are you marketing about it? We as South African businesses, we are operating in South Africa, are pathetic about what we do out there in the marketplace. I landed at OR Tambo yesterday from a travel trip where I left Miami on Friday, and then he got to OR Tambo yesterday morning. the reality of fact is a beautiful billboard up there where this organization shows on a billboard what they're doing with their spend on corporate social investment, socioeconomic development, name it what you want. Where's it going to? How is it making a difference? And how that difference is a circle back. I'll give you one example. Most of you have a training center. So why don't you offer maths and science for your particular employer's school kids on a Saturday, on a day that you're not so busy? In your training center, all it requires is the hiring of a maths and science teacher who's competent to give those people the skills they need for the future. Or digital skills. Why are you not allowing members that work for you, the staff that you want committed, the staff that you want to have a good feeling about you? Why don't you use that training center? All you're doing is then employing a person in respect of giving that training on digital skills, maths and science, whatever is needed. And those are simple issues to do, not hugely expensive, but definitely claimable back to social economic development. And we as South African businesses don't shout enough about what we do. Many businesses of the 51 that are on this, delegates that are on this call, do a huge amount, but say nothing about it. That time must stop. Government, our employees don't even realize what we do, need to understand what we do in respect of where we spend our money and what return we get back for it. So whether we get a direct return back for it in respect of getting more customers because they like what we do, or we get a better feeling from our employees because they feel more committed that the organization's doing something for their kids. All of us as parents, what a better advantage for our kids. What better way to do it was in your own structures if you do have a training center. It's just one of 1,000 opportunities we have, of 1,000 opportunities that are not just ideas that we've implemented in certain companies. Back to you, Richard. Thank you.
I think, Johnny, this is the one thing with it's a case of going in and actually interrogating what you're doing, because I'll use an example of a client of mine. I said earlier that there are normally two areas where people cut money if they're under pressure from their board to save funds. First one being skills development, the second one being socioeconomic development stroke CSI. This client of mine put a line through a 28 million rand feeding scheme that basically was their entire socioeconomic development. It was my first interaction with the client because the client then phoned me and sat there and said, Richard, we've been referred to you. How do we get this back? Because it's 5 points off of our scorecard, which means that we go below the level that we want to be. And we're in a level and we're in a market where your BEE level is critical. So how do we do that? I sat there and said, you start shaking every tree, kicking every rock, looking at every opportunity, speaking to every manager that you can, and find out what we've got. That was about 8 years ago. I was on a call with them last week Thursday, and we were still investigating new items where people were saying, oh, we do this, we do this. So guys, it's one of those things where I mentioned under skills development, you've got to think out of the box. Enterprise development, supplier development, socioeconomic development, exactly the same thing. I tell everybody, like that client of mine that I spoke that I use as an example, I've been working with them for 8 years. I'll never know their business as well as they do it. I'll never know their accounting systems as well as they do. But I've got experience. We've got experience in the global. We've got a lot of experience in terms of actually saying, how do we actually take what you've got and how do we make it work best for you? Just want to flag a couple of very important words with regards to socioeconomic development, and that is facilitating sustainable access to the economy. So basically, that's what we've got to be doing with socioeconomic development, using the BPO sector. Instead of training people who work for a company, as an example, we could be training individuals. And that then would then come under socioeconomic development. Is there anything that we do with that? No, we're training that individual to actually have the skills, to have the knowledge to possibly start working in the BPO sector. I can remember, as Johnny mentioned, we do a lot of work in the auto sector. I'm sitting in East London, and there's a car company on the hill that everybody knows about. I'm not going to even mention the name. People who know East London will know who I'm talking about. A couple of years ago, they had a new model run, and they needed to bring in an entirely new shift. So they started training a lot of people who were not employees of the company. That was initially that we looked at training under skills development because it was a priority element. It fitted there perfectly. We also sat there and said any excess of over that we can claim here under socioeconomic development. So it's a case of what are you doing? How do you package it? How do you identify it? You know, I've seen people who are very keen with putting things up on walls, picture walls. And I've been to clients where the first thing I do is walk around the reception area and see what they've got on their picture wall. Often they've got things of socioeconomic development. And it's just a case of, they put it there, okay, that's CSI, okay, we don't see the link between CSI and socioeconomic development. So it's a case of, I like asking lots of 2-year-old questions. Why do we do this? How do we do this? Because I find it helps a heck of a lot. Just to quickly talk about a couple of other, one other thing that we use quite extensively to get levels. It's possibly a bit expensive, but you can buy a couple of levels on your scorecard by using what we call the Youth Employment Service, or YES. There are a couple of things that we need to do first. There are a couple of tickets to enter the YES game. Firstly, we must meet all priority elements, in other words, not be discounted on our previous year scorecard, or else we must average 50% across the priority elements. So that's one way where multinationals come in, because we make sure they average 50% across the priority elements. They must maintain or improve your BE scorecard each year. So if this year before YES, you're a level 5, next year you must be a level 5 to play in the YES game once again. The targets are based upon the higher of 3 things. Firstly, your headcount in the preceding year, so 1.5% thereof, rounded up obviously, because I've yet to see half a person on the YES program or on learnership. 1.5% of your average net profit after tax from South African operations for the last 3 years, divided by 55,000, or a target in Annexure A of Table 1. And basically what that says is that if you have sales of over 40, the highest level, it's on a sliding scale, but the highest one is if you're, sorry, I don't know how that came through because I've got everything turned off. But if your turnover is greater than 450 million, I beg your pardon, you've got to have 15 people on YES. It must be new jobs in addition to existing headcount, or you can sponsor people at EMEs or QSEs. Subject to South African labour legislation, 12-month fixed-term contracts, no expectation of further employment. And they must be unemployed Black youth, and they cannot have been on the YES in the past. And here's the benefit. You go for 15 people, as I mentioned there, and that was the lowest target, and you give 2.5% of those people a job at the end of the YES program, you get 1 level on your BE certificate. If you have 1.5, if you go for 1.5 times that target and you get 5%, so instead of going for 11, you would go for 17 and give 5% of that absorption at the end of the target. You get 1 level on your BE certificate plus 3 bonus points. Or if you go for the full 22 people on, 30 people on your YES, and you have 5%, you have 2 levels. It's a very useful way of doing it. If you don't getting 2 levels on your BE scorecard, especially if you don't have ownership, because I've got one multinational client that is a level 3. They're a level 3 because they make sure they maximize all their skills development. They've maximized the points under procurement, under enterprise development, under supply development, socio, etc. They've even told their overseas board, their overseas shareholders, exactly how the South African board must be structured to maximize points. So they are a level 3 because of YES. So it is a bit of an expensive way to do it, because you've got to pay on an annual basis to register. You've got to pay on an annual basis to register each and every youth that you put on the program, and you've also got to pay them a monthly stipend. So it can be a bit expensive, but it is very efficient. And onto the call to action. Lynn, anything you want to say first before we go with it? Johnny, anything you want to add?
I think you go for it, and I'll add at the end, barring what Lynn wants to say. Thanks, Rich.
Okay. I'm going to leave the first bullet to last and start talking with the second bullet. I think for everything that Johnny has spoken about, that we've spoken about, is that we've got to try to find ways to minimize our spend and to get maximum benefit. And that is, like, as I said, like, I'm an accountant. I don't like spending money unless I absolutely have to. So we've got to make sure that we are getting recognition for every rand that we've spent, and we are identifying correctly each and every rand spent. Make sure that we've actually got it in the correct element, whether it's skills, whether it's procurement, enterprise development, etc. We've got to make sure that we are doing that. Johnny's mentioned it a couple of times. Why are you a level 4? Why are you spending all that money to be a level 4 when all your competitors are level 7s and level 8s, and there's no other reason for you to be a level 4? Is it just purely a vanity call? And it's a case of then we need to look and say, guys, can we reduce your spend? Can we reduce your levels? Can we make it a lot more of a reasonable cost spend for BEE, and get to a level 5, get to a level 6, and you still have that strategic advantage over your competitors? Do we need to start looking at ownership? Do we need to start looking at some of the other things we flagged under ownership to make sure that you are getting that, where possible, that 51% black ownership, which actually can help you strategically on the procurement scorecard of your customers, and still have a reasonable BEE level? Johnny has spoken about procurement and how we actually structure our procurement, how we restructure our procurement to possibly get a better BEE benefit, to look at our suppliers, to look at their levels, to look at our ownership and mixes under procurement. It can have a significant impact, and it's something that we've got to do right the way through the year. We can't just start doing that at the end of the year, because we can't unwind procurement. Lynn has spoken about adopt a company. Do we adopt a small black-owned BPO? Do we develop it to take up the business which isn't economically viable for us? Is there anything that we can do with that we can actually build capacity in the industry? Could we almost use them as a feeder into us from a business perspective? Focus, skills, enterprise development, supply development, and socio-economic development, critical points for us to look at. In today's economy, we've got to make sure we turn over every rand a couple of times before we spend it. It's got to be spent cleverly. It's got to be spent efficiently and properly. So we've got to be very targeted in what we do and all of that. The old days of just spending money, of giving money to a black-owned business for enterprise development, supply development, those days are past. We've got to be clever. We've got to make sure we're getting a business benefit from that. And then just to come to talk to our last point first, our unabashed plug for business. We'll give you 1 hour's free consultation. Johnny's and my contact details are on our introductions at the beginning of the year, at the beginning of the presentation. That Sam Keller went past so very quickly. We'll give you 1 hour's free consultation to see if there's anything we can do to assist you. Johnny?
After Enshi, thanks.
Oh, sorry.
Go for it.
Thanks, Johnny. So obviously, I always carry my government hat around with me, and sometimes enjoy using it. So in this context, just to let you all know that, I mean, one of the most important things, if you want to participate, obviously, in government initiatives, is that, you have to ensure your triple BE, well, not just compliance, but I think becoming even more important now is progression with regards to the scorecard. So the first thing I think, from a call to action perspective is to make sure that you each do a gap analysis. I mean, we personally are doing that for BPESA now as well as an industry association. It's important for us to also be measured and to also look at, where do our gaps lie. And I think it's important, that's the first step in terms of ensuring that, you tick this box of compliance, and ensure that everybody does at a minimum a gap analysis, because that will show you exactly what needs to be done under each of these objectives that Richard so eloquently shared earlier on. And then once you know what your gaps are, you could almost also cost that to see, listen, what would the cost of, shifting from a level 8 to a level 6, eventually to a level 4, look like, so that you can plan in advance. The one frustrating thing that I used to have to experience when I was at the DTIC was that people wait for the last minute. BE is something that needs to happen from the beginning of the financial year. You cannot wait until January or the 17th of February when you have a financial year end at the 28th of Feb or 31st of March to say, oh my God, now what do I do? It's not the ideal situation to be in, and it's not something that you can go back and change retrospectively. The facts and the figures are as they are. And I think from a call to action perspective, please make sure that you do proper transformation planning or triple BE planning within your organizations, so that you're not going to be sitting with the frustrations of non-compliance, and then that non-compliance results in you not being able to access many opportunities for growth within the GBS sector, within the space. I mean, even if you wanted to try and get local work, and not just international work, triple BE requirements are one of those very important aspects that you would have to comply with. We actually also trying to assist you guys by saying we need to improve up the scorecard. So perhaps when you all are investing in any of the BPESA activities, you're also getting, whether it's membership or whatever the case is, perhaps also getting some kind of recognition for your contributions to your industry association that, hopefully gets to a level for ourselves. But that's what I just wanted to say from my side. It is very important to have that gap analysis. And I just want to take the opportunity, while I have the floor, to thank Johnny and Richard for all of the many, many hours that you've spent with my team getting us to this point, and for all of your wisdom and guidance in terms of how we can make an impact to this industry from a transformation perspective. So thank you very, very much. And most importantly, on behalf of everybody, thank you for the 1-hour free consultation that you guys have offered as well. I'm sure you'll get many people reaching out to you after the session. So thanks. And Lynn and Samkelo and Natasha, thank you guys for putting this together.
Excellent. Thank you very much. I just got 2 questions from the members of the audience. Sorry, Johnny and Richard, we're nearly done. The first one comes from our own Steve Jobs, our own Jack Ma, Kobus Nell. Question is, when mentioning the DTI, Rash, I'm sure it's the DTIC, because DTI is an engine of a car, VW or an Audi. When mentioning the DTI incentives, what are the level requirements? Resh, do you want to try that one, Sissy, for us?
Yeah,
Then I'll come
sure.
to the next one.
It's definitely DTIC. Don't ever leave out the C, because competition is very important. And please always make sure that it's all in lowercase and it's bold, guys. Tip for you. But anyway, So currently the DTIC incentives requires a level of compliance, which is your minimum level of 8. However, as you all know, there's a new minister within the DTIC, and I believe he is quite passionate about transformation, and they are undergoing a process of the incentive review at the moment. While we all recommended that it remains at a level of compliance so that we can continue to attract the kind of scale of jobs that we've been attracting thus far to the country. We're not sure how he's going to react and whether he's going to say, but listen, he wants to see at least a level of 6 or 4. You know, at some point, the requirement was a level 4. We had to really motivate for that level of compliance. So at this moment, it is a bit of an unknown for us until he approves the new guidelines, which is why this session was so important today, because irrespective, and I think to Johnny's earlier point, irrespective of you know, whether the incentive is going to require it or not, a localization strategy in any country is extremely important. If you are a business operating in a specific country, you know, they used to say, when in Rome, do as the Romans. When in South Africa, please make sure that as a business, you do the right thing, you transform, you reach the level of BBB compliance that's important, and that you are contributing to a transformation objective in this country. So I would say, let's not even wait for, you know, what does the guideline say? Let's do what we need to, especially, like I said, the first point is that gap analysis. And you know what, I mean, when you actually do that and you submit it to the DTIC, it actually does have quite a bit of value in their due diligence processes, because they can see, listen, you are committed to this, and that you're wanting to do the right thing, and that will actually help you in terms of strengthening your position with government. So yeah, I hope that answers the question.
Excellent, excellent. Thank you very much, Resh. Then the final question to you, Johnny and Richard, comes from Tumane. I need to put a disclaimer. Tumane comes from the valleys of the Eastern Cape, where the Fish River, the Gamtus River, and the Sundays River intersect in one way or another. So coming from there, they tend to ask longer questions. The same place where they make those cars, we didn't mention the brand, but definitely it's not BYD. I don't know how can you call a car build your dream car. He begins by his question by saying, for BPO operators who would like to use ED to develop SMMEs and integrate them into the supply chain, would Bepesa assist them either to match, not Tinder, but to match, find the SMEs in the region to be able to facilitate and the contributions from an ED contribution, and then graduate to supplier development beneficiary once integrated into the supply chain? I think that's a Rashni and a Lynn question, that one. Sorry. Sure. Oh, Johnny, you got your hand up. Sorry, sir. Please go ahead, and then I'll give over to Lynn and Rashni. Sorry, sir.
Yeah, just my final word would be thank you very much to Lynn, Rashni, and yourself. Great MC, and Molo Kunjani. You know, how are you from the Eastern Cape? We love our Eastern Cape roots. So if you do come between the Gamtus and the Fish River, then you're part of our territory. But the reality of fact is, a number of questions, expectations are raised at the beginning of this. Talked about ownership, we have done that. Talk about enterprise development, supply development. We've had long discussions with Lynn about this opportunity around coming up to Bepesa for this opportunity of the SME. So reach out to Lynn and her team, Samkela. There's been discussions, extensive discussions of how to facilitate this. So my friend out the Eastern Cape, 100% that can be accommodated, because there's been extensive discussions about how one can structure and do that. Again, Richard will be fired after the session for offering the 1 free hour consultation, which I didn't know about. So I'm going straight into super inquiry, which I'm chairing. But be that as it may, he's offered it, we'll willingly give it. Not because we want the future work, because we want to contribute to making it clear to you as to what is achievable within your limits as particular businesses. and how you can maximize your current scorecard, because I guarantee you no one on this call is maximizing their scorecard as they want. We are in full support. And I must tell you, working with the best is a pleasure because they drive you to excellence. We had a number of meetings about making sure the slide presentation was spot on and delivering what the members wanted. So just thanks for that. Their standard enhances our standard. It's a pleasure to work with people who are attentive to detail. Thank you very much.
Excellent. Thanks, Johnny. I'd like to give over then to Richard to say the last words, and then if Rashni and Lynn can just close it for us. On my side as an MC, thank you very much. It's been a great session. And Johnny, thank you very much for coming back from the US. At one stage, we thought we were going to stay over there. Richard, we shall connect over the BYD cars. Over to Rash and Lynn, and then we can close the session. Thank you, colleagues.
Over to you, Rish, for final words, and then I will.
No, sorry, Len. I think I've said my final words, so I'll leave it to you. Yeah, thank you so much once again, everyone.
Thank you.
Excellent.
So much.
No, thank you. Richard, just before Lynn goes, can you please put that slide with the contact details? Because we've already offered people a 1 hour free consultation. You had it right now, sir. The one for GBS contact, yeah. You had it right now. Don't go far now. To stay, stay in Africa. Don't go far. There's one slide that's got all the contact details.
That's got Johnny's contact details, not mine. So
Perfect.
there's the one that's got mine. And if we go to Johnny's, there's Johnny's contact details there.
Okay. Thank you very much. Lynn, over to you, and then we can close.
Thank you, Samkelo. Just a final thank you to the Global Business Solutions team. This is a difficult topic. It is hard subject matter. And so we try to give a balance between telling you the technical information, but then also trying to showcase what the real opportunities are. And they are not far away. They're right close by. They're in the sector, they with fellow members, and those opportunities can help all of us as a sector to develop and grow this wonderful sector, which is the SMME sector, and help us all to deliver the kind of tangible results that we're looking to deliver within our sector and individual businesses. And then lastly, this is the year when we are going to be putting a whole lot more effort and time behind the SMME portfolio to make sure that we deliver the outcomes that are required. And so I am available to anybody that would like to have a further or a deeper discussion around how you can be involved in supporting our SMME members nationally. And of course, always passionate and always love the opportunity to be able to help and to be of service to our members. So thank you very much, Samkelo, for running the session very ably and for bringing in all of those lovely anecdotes and fun things that you say to help us to lighten the topic. So thank you very much for that. And then a lovely afternoon to the rest of our members. And please remember, later on this week, we have another very interesting webinar talking specifically around how you can be involved in managing and understanding disability a little bit better and how you can play a role in the sector. Thank you, Samkelo.
Thanks. Thank you very much, colleagues. Safe travels. If you are in Joburg, remember some robots do not work. If you are in the Western Cape, there's still an M3 and an M5. If you are in the East London area, I wish you all the best with your metro that side. Thank you very much, colleagues. Cheers. Bye.
Cheers, everybody. Thank you very much.
Thanks, everyone. Bye-bye.
Bye.